My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you make money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Which is it? Are we headed for a frightening future, or are things the best they've ever looked? Right now, it is no exaggeration to say that we have a truly Dickensian best of times, worst of times scenario on our hands. Today, the averages seem to agree with the best of times thesis. Dow gaining 344 points, S&P jumping 1.12%, and the NASDAQ putting on a real show, jumping more than 2%. Perhaps because interest rates went lower? Or perhaps because, hey, maybe we're just getting a little oversold. You got to understand, right now, the American consumer is looking incredibly strong. We're spending at retail stores. We're using more credit. And after being pent up indoors for ages because of COVID, we're finally ready to travel. Which is why, when we had the CEO of Delta Airlines, Ed Bastian, on CNBC this morning, in the wake of his terrific earnings, he could say some of the most bullish things I've ever heard about his airline, really about any industry in particular, and about the consumer in general. Listen to this.
The demand is phenomenal. We've never seen in our company's history demand for our product and services at the level we are. In the month of March, we had the highest sales in terms of bookings of any month in our history.
Holy cow, they've been around forever. Yet at the same time, if you listen to Jamie Dimon, the CEO of JP Morgan, on his quarterly conference call today, he told a much more downbeat story. Frankly, I thought it borderline frightening. In particular, he had some very discouraging comments about the war in Ukraine. Take a listen.
I pointed out in my letter that, war in Ukraine, usually wars don't necessarily affect the global economy in the short run, but there are exceptions to that. This may very well be one of them.
Then Jamie goes on.
I hope those things all disappear and go away. We have a soft landing and the war is resolved. Okay, I just wouldn't bet on all that.
I just wouldn't bet on all of that. Not encouraging. Now, both of these guys could be right. Delta's Bastian is looking at bookings, and he's shocked to see how strong they are. Plus, he's noticing that passengers have little to no resistance to higher prices, something he can't recall seeing in the entire history of the airline industry. I think a lot of people, come on, they're desperate to travel now that it's safe. You've also had a ton of delayed weddings that can be held. Now, when we had JP Morgan's Matt Boss, the best retail analyst in business, on the show the other day, he said the consumer is quite strong. But Jamie Dimon, on the other hand, well, he runs a worldwide bank. And when he looks at his book of business, he sees problems. A $500 million loss due to the war in Ukraine. The creeping up of possible loan losses after years of them going down. The possible intensification of an unpredictable war. The sticker shock from inflation. The resulting slowdowns. The Fed needs to raise rates to stamp out inflation. These are not bullish things. In fact, if Dimon talked like Bastian, he'd sound like a lunatic. But that makes sense. Bastian deals with the consumer. Dimon deals with the consumer, but also the enterprise. Consumers might be willing to spend like mad, even in the face of a Fed-mandated slowdown, just because they're so eager to get out again. But businesses, different set of priorities. So what happens? Delta stock, it finishes up $2.41, or 6.21%. JP Morgan's, it loses $4.24, or 3.22%, a 52-week low. All right, so now, how do we make sense of this best of times, worst of times moment? First, let me tell you something I learned more than 40 years ago when I bought my first stock, American Agronomics. I heard about this company, that it had amazing orange groves in Florida. It sounded like they're having a banner year. I went to the Mercantile Library in New York City, read some reports about it, everything checked out. Plus, maybe best of all, American Agronomics was only a $10 stock. So how much could I possibly lose? Well, let me tell you something. Right after I bought it, Florida got hit with the worst frost in its whole history, and I lost almost my entire investment. In other words, luck. Luck plays a huge role in this business. If Putin blinks, then maybe the whole crisis could come to an end. Wouldn't that be fabulous? Now, you may think, wait a second, that's fanciful. But I'm old enough to remember the Cuban Missile Crisis, when John F. Kennedy threatened nuclear war over Soviet missiles that were in Cuba. And Nikita Khrushchev, the head of the Soviet Union, he blinked. And Khrushchev, I know Putin's supposed to be tough. Khrushchev was one tough guy. He was a war hero at the Battle of Stalingrad. He was one of the toughest soldiers in a war that cost the Soviet Union more than 28 million lives. Putin doesn't have that kind of credibility, so maybe he'll blink too. If that happens, then we will look back and think Jamie Dimon's comments were too dire. You can bet the other bank CEOs heard him loud and clear. They watched his stock plummet, so they won't be making the same mistake again, believe me. At the same time, we know the travel business is incredibly fickle. Hey, a lot of things go wrong. How about like bad weather? Maybe Ed Bastian and his team at Delta will turn out to be too bullish. We don't know. More important, though, these two industries, the banks and travel, are not for everyone. Both the banks and the airlines can be very sink or swim, so you might not want to extrapolate too hard to the rest of the economy. Perhaps we should think about something with a longer-term perspective. Did you know that today Procter & Gamble increased its dividend by 5%? The 66th year that the firm boosted its payout. I know, only yields 2.3% here, but you know what? You know why? Because the stock has steadily rallied for ages. Well-managed, great products, everyone uses them in a slowdown. As I said to the CNBC Investing Club today, plain, bang, shampoo, what you need the most in a recession? Procter. All right, here's another one. If you think Bastian is right and the airlines are doing fabulously, then how about a destination? We told Investing Club members at our morning meeting that if people are traveling, they'll head to the most coveted vacation spot on earth. They're going to Disney World. Right now, there's not, a lot of negative mojo about Disney. Matter of fact, I can't recall another time when this iconic company was more at odds with the price of its stock. These situations usually resolve themselves positively for the stock as Disney makes changes to close the gap. And that's what's going to happen here. Trust me. Or if you're interested in owning a bank but are turned off by Jamie Dimon's comments. Believe me, so are the other big banks. Banks make fortunes when the Fed raises rates. They can invest your deposits in treasuries, get higher risk-free returns while paying you next to nothing. And remember, if you want to find a bank that will benefit the most from higher rates, look no further than Bank of America, which has a gigantic deposit base, much more of a domestic story than JP Morgan. And also, by the way, I bet you Brian Moynihan, the CEO, I bet you he listened to Jamie. He's not going to echo that guy. If that doesn't work for you, and you think Jamie's right about how the war in Ukraine could spiral out of control, then maybe it's time to own a defense contractor. I think Raytheon Technologies, best way to play it. If you believe the Ukrainian government will be getting more hardware from the West, I hope they do. But as always, hope should be not part of the equation. The bottom line, look, this is a hyper-confusing moment. But I want you to search for stocks that can work long-term, regardless of whether we're in the best of times, the worst of times, or both. Let's go to Nicholas in Maryland. Nicholas.
Booyah, Jim. I was just wondering if you think I should hold on to Chipotle, letter CMG. Also, I was wondering if you could shout out my business teacher, Mr. Marks. It would mean the world.
Well, I would like to shout out to Mr. Murch. I can whisper to Mr. Murch that I think he's doing a good job. Chipotle is breaking out here, and I think it's the best of the best, and I think you should own it. I've liked it since 300. I like it at 1,500. Jeff in California, please, Jeff.
Cramer, I'm a founding member of the Investing Club, loving the morning meetings. Just read your club piece on net interest margins. Could not have been more timely.
Thank you a lot. Thank you.
Oh, sir, thank you so much. I'm looking for banks that will profit as the Fed raises rates. I saw a bank stock mentioned in the newsletter has a yield of 3.7, a PE less than 8, and a recent double upgrade to buy. What's your take on Key Corp?
I think Key Corp is, excuse me, I think Key Corp's terrific, and I think you should buy it. I would buy it tomorrow. That's how good it is. It doesn't have the problems at all that JP Morgan has. It's the perfect antidote to JP Morgan. All right now is the time to search for stocks that can work long-term, regardless of whether in the best of times or the worst of times, or both. On Man Tonight, our growth at a reasonable price series continues, and I'm digging into the semiconductor stocks to see if any could pose a good value. Then, could today's bounce in the averages be a sign of what's to come? I'm going off the charts on the NASDAQ 100 to see if tech could be ready to rally. And with our response to the COVID-19 pandemic continuing to evolve, I'm learning more about what's working and what's not with Dr. Eric Topol. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.